Hey, it's Andreas, and let me present to you an interesting investment opportunity that I found today. This company, Vacasa, I will talk way more about it in the summary. It's getting a lot of coverage right now, and I want to bring you guys this first because this is still a small cap company, alright? They are only about $1.5 billion in market cap. This is very small, and take a look at the revenue numbers here, about 0.9 billion. So great price to sales ratio in this case. What do? Well, they provide a platform for renting out vacation properties to Americans around tropical destinations as well as destinations around America such as Lake Tahoe, etc. I took a look at the website. It looks absolutely amazing. I will link it in the description of this video as well. And just a quick call to action. If one of my viewers have tried out their services, please let me know if it was a good or bad experience, because the user experience is extremely important, and although it does not really sound like stock research, this is super important and one of the most important insights we as small retail investors can have. This gives us an edge over Wall Street. Alright, in terms of revenue has grown at a rapid pace, typical of a growth company, and recently we have seen positive earnings per share as well. I will show the exact numbers in the end of the video, but you can see that there's some seasonality in revenue as well, so be aware of this when you value future cash flows. Taking a look at dilution of numbers of share outstanding, we can see that they have had some dilution in the past, and there's very little history since this company recently went public via a SPAC. So there's a lot of uncertainty in the way that the company will be managed. Will they be diluting? Will revenue be able to continue to grow at this amazing pace? At least management seems to be very competent. In terms of some interesting events that are happening with this company, we've seen recently here that Deutsche Bank started covering them. I've seen JP Morgan write about them. I've seen that one of the management of the company got a spot at the Goldman Sachs fireside, so they're getting a lot of publicity from institutions, and this leads me to believe that the brokers at these large institutions will start pushing this stock to their clients in their market research, in their recommendations, and this stock price has been hammered just like any other growth stock recently since the IPO that brought in a lot of value. They have just declined, and maybe some demand side buying will put a positive pressure on stock price. In terms of top line revenue here, year over year 31%, and gross booking value also up 32% year over year. And diluted earnings per share here, you can see 2 cents per share positive. That's the important event, a growth company with slightly positive earnings per share. The only thing that worries me in terms of a risk profile about this investment is with regards to that we have so little historical data to fall back on with dilution. How will they act in the future? Will they grow aggressively via acquisitions? And also that I'm not based in America, I don't know about their product, I haven't tried it myself, I don't like that aspect. So I would really hope that one of my subscribers have tried the service, know about it, if they think it's smooth, because chances are that other people will really enjoy it as well then, and then we have a positive user experience. So important. That's the story behind the numbers of growth, and that can't be fudged by accounting in any way. And I would really like to know, because that lowers the perceived risk profile that I as an investor have when I view a company. We can't just look at the numbers, we need to look at the business as well. Alright, that's been it for this short introduction to this interesting investment opportunity. As always, I hope your money multiplies quickly. Make a ton of money, my friend. That's been it. Take care. Bye bye.